October 10th, 2023. You can see the entire day today was a leg one, leg two measured move with yesterday. We got the leg one up here, pullback, wedge pullback here, and then leg two. And that's pretty much the exact high of the day. And when you get a move like this, you should be expecting a second leg, though it's often not as strong as this. And this whole move that we've had over the past couple days has essentially been a giant bull channel, long bull channel. Bull channels will typically end after 150 bars or 2 or 3 days. And so you can see we're pretty overdone here to the bull side. And that's one of the reasons why we get a big bar, like I believe it was bar 43 today. It's one of the reasons we get a big bar like that is because when you're in a bull channel for so long, you got to keep in mind a bull channel is a bear flag. So it's probably going to break up to the downside eventually. So it makes sense that you get a trend line break that's, so violent like we did today. Now tomorrow is going to be interesting because, you could be looking at some sort of larger trend line break, retest, major trend reversal. So I wouldn't be surprised if tomorrow we retest. This is a complete guess. Maybe this will happen, but we get some sort of reversal up and then maybe a double top with something up here and a reversal down and, ends up forming some sort of trading range. That's very possible too. But I personally have trouble when there's been a trend day for a couple of days in a row, and then there's another one because just usually after you get two bull days in a row, you really it's very unusual to get a third. And that's another big reason why bar 43 happened is because bulls were not expecting this to happen. And so when they were buying on the way up, they were probably pretty skeptical the whole time. And when you start to get a sell-off, bulls will just panic out. And that's why you get such a big bar here, whereas you didn't get a big bar in here and you don't get a big bar over here is because no one was really expecting this today. This was a low probability event. More likely, we were going to be in a trading range. You can see on the open, we had buyers yesterday. And when you buy down here at the move below the moving average, after about 20 bars above the moving average, you can be expecting one more test of the high. But generally, once you get that test of the high, the market will form a trading range somewhere around here. Within basically from this high to this low, be expecting a trading range. And that was my expectation coming into the day. So when we started to rally, I had a pretty difficult time trying to get long. So bar one, bull bar, but a doji, like I said, probably sellers up here. You know that bears who sell above this bar or above this are probably going to make money. You can see they were able to on bar two. Bar two is an inside bar. I've showed examples in previous videos I have of inside bars as opening swings. This is an example of a time that it failed. It's low probability sell below two. And if you get three, a lot of those traders are just going to get out. If you're selling below two, you're hoping it's the low of the day. And this is the high of the day and you're just going to get a collapse. It's really unlikely, but it might occasionally happen. So that's why traders might sell below two. But when they're disappointed in three, you can see once we traded back down to around their entry price during four, those traders just bought back shorts. And that's what caused this rally on four. Five, follow through for the bulls, but a tail on the top. And six is an interesting bar. Six breaks out above these highs. And, at being early in the day as it was and being not bullish on the day, I was expecting that bears who sold above one scaled in higher, or bears who sold above five and scaled in higher, they were going to be able to make money. So I was essentially expecting after six, it was a good bull bar, but I was kind of expecting us to pull back to at least this high. And we didn't, and we got big follow through on seven. And so when you get big follow through on seven, the bears who sold above this high are covering above six. And that's why a lot of those traders, that's why all that buying is happening. And bulls will be buying above six, knowing that some bears are covering. Generally, if you can find spots where you think limit order traders might be trapped, so traders who sell above here, just put yourself in their shoes. Just think about it. If you sold above this and then you see six, you're probably thinking, oh, that's really not good for me. That might be, this might form some sort of bull trend. It probably won't, but it might. And so that's, if it's a spot where you think limit order traders might cover, it's probably a good spot to take a swing trade. It's not necessarily high probability, but occasionally you're going to get enough traders being scared out of the trade that you're going to drive the market up like we do on 7, 8, and 9. So good follow through for the bulls on 7. Now these traders are trapped and they're going to be forced to cover up here. So more follow through on 8, more follow through on 9. You can see that ends up forming, an open gap. We got another open gap with the 8 high. So traders who sell above 8 looking to scale in higher and make money, they're really disappointed in 9 and they're not able to make money on 10 or 11. And they end up starting to buy back shorts. Once you get a doji in a buy the close rally, the market is typically going to start to go sideways within 3 bars. And that's kind of exactly what happened. We got 12 and 13. So bull bar, but sellers up here, probably because the doji. So anyone buying for any reason above this is going to scalp out. And that's kind of the same thing that happened on 13 and 14. We're pretty overbought in the short term. And on, over the past couple of days, we're pretty overbought. So a lot of those traders are selling out of their longs, scalping here. But it's also been a bull micro channel from, we've had how many bars in a row without a bar closing below another bar or trading below another bar, 12 bars without, a bar trading below another bar. So, the first time that we trade below a bar, bulls are going to buy it. For example, we traded below 14 on 15 and bulls bought, and they bought more lower, knowing that we're probably at least getting back to this 14 low, if not higher, probably to a new extreme. Selling below 14 is not a good trade. So that's why traders will buy it. 17, it's a second leg up for the bulls. If you think about it, if this is a 12 bar micro channel and you're buying up here and then the next bar immediately trades below, you're probably going to scale in, but you're probably sufficiently disappointed that it didn't just continue to rally. And so that's why a lot of those traders, when 17 starts to rally, they just sell their longs up here. Especially, traders who bought above 13, tick or two above 13, you can see they're getting out around break even on their first entry with a profit on their lower entry during 17. We had an inside bar on 18. It was never sell the close in here, but it was a pair of bear bars. So some algorithms might sell the close of 16. It's not a good idea, but it's actually a really bad idea. But there are some algorithms that will do it and they'll scale in higher. And, the logic, I think, is that the traders who sold above 11 were able to sell more higher and they made money on 16. And you can see on 16, that's why we found buyers here. Traders sold above this, they sold more higher. And obviously, if you sold above 11, you're disappointed in 12 and 13. And so you're getting out around break even if you can on your first entry with a profit on your second. And that's exactly what they did on 16. So that's why they were buyers at this 11 high during 16. And anyways, like I said, we got the second leg up. And any bear who was short, maybe on the close of 16 is disappointed in 17, obviously. And they get out at break even during 18. So the way that those algorithms will manage that trade is they'll sell the close and they'll probably have, an extremely wide stop, and they can scale in higher and get out at break even. Or if it continues up, they can continue to scale in, which again is why it's dangerous for a person to take this trade. Or if on the off chance that 17 just collapses, they can make money that way. So that's how those algorithms would manage that trade to make money. But it's not a good idea for an individual trader. 18, so that's what I said. That's why there's buyers right here, because those traders were disappointed in this, scaled in higher, and they get out. And all that buying is probably what is a big part of what's causing 19. And 19 does something important, right? It's a high two, so 1, pullback 2, so it's a two-legged correction. And some traders will buy above 19, hoping that we're going to get maybe a swing up of what essentially turned into a bull flag. So they're buying with a profit target somewhere up here and a stop below 19. That's about 2 to 1 of their risk. Something like that. You can see that we got almost exactly 2 to 1 of their risk on 22, but 19, did something important in that it trapped bears who sold above 18. If you sold above 18, you're disappointed in how strong 19 closed, and then a lot of those bears covered above 19, and that's what caused the big bull bar on 20. Now it's notable that if you sold above the 14 high and you sold more higher, you were able to get out on the tail of 21. So that's the thing with a lot of these channels. It's a tight bull channel, but limit order bears made money here. Limit order bears made money here. They weren't quite able to make money here, but they made money here. So if limit order bears are starting to make money, you have to be aware that this trend might not be as strong as you're hoping it's going to be. And 21 is, it's an inside bar and it's a reasonable buy for a swing, but it's a swing. It's a low probability buy. More likely, we're just going to go sideways. But if you're taking a low probability buy like 21, you want it really fast follow through, and you got it on 22. But the downside of trades like this is sometimes when you get really quick follow through, traders will just scalp out. And so you get 21, you have zero true risk. We never even traded a tick down. So you have zero true risk buying off 21, and you get a quick, not quite 5 points, but a quick couple points. So a lot of traders will scalp out. And it's notable that if you sold above the 20 high, you were able to exit with profit during 24 if you scaled in higher. So limit order bears are making money now. So it's not as strong as this. Again, this is hard to get into when it's overdone. That's a big problem that I personally have with my trading um, is when I'm it's just kind of being in denial of the price action of what's happening in front of me. I was considered buying above 6, but I didn't. I considered buying above 7, but I didn't. And I ended up watching this whole thing without getting in, which is okay. It's better than taking a bad trade, but I've been a lot better about getting into trends recently. I have a much easier time when it's a breakout of a trading range, or, even if it's unexpected, it's okay. It's just that with the way today formed, I was, and where we were on the daily chart, I was just really not expecting a bull trend, but you have to be open to anything. Additionally, we had a doji on the open and a doji on bar 3. So when you have a couple dojis in the opening range, it greatly increases the chances of a trading range today. So that was even more reason why I hesitated to buy, up here. I was too worried I was going to get trapped at the top of a trading range, which is going to happen sometimes if you're buying up there for sure. But also notable, it was a really small opening range. It was only a couple points. And when you get small opening ranges, I have a couple examples. Small OR. So when you get small, this is a lot of them. Small opening range, you get a trend. Small opening range, we got a pullback and then a trend. Small opening range, trend. Smaller opening range. A lot. You can see a lot of these days end up being trendier types of days. This is today, obviously. But yeah, this ended up being a trading range day. I wouldn't have been surprised if we did something like this today. I thought we might get all the way back, but my concern was that this was really strong and it might get a second leg up, and that was one of the reasons I thought the 63 was an okay buy. But if you do buy above 63, you have to be worried about 64, right? I mean, if you're buying above 63, shouldn't 64 be racing up and trying to get back to the 42 low where limit order bulls got trapped? Isn't that what you're expecting 64 to do? So when 64 doesn't close strong, traders just sold out of their longs immediately, and that's what causes 65. And additionally, if you bought above 63, what's the high, right? So 43.9875. So it needs to go to 4403.25 to make a 5-point scalp, needs to go 98.75, 4404.25, and you can see the high was 4404. So it missed by one tick. I think that's right. Let me see if I'm being an idiot. No, all right, I was right. So it missed by one tick. So 64 needed to go one tick higher in order for bulls to make a 5-point scalp, and they got trapped. And so you have a lot of, they weren't able to get that 5-point scalp. And so a lot of them are just disappointed. And at this point, probably a little scared that we're going to get something like this. So they're selling out, and that's what causes this. But so we get spike phase, right? And now we're in the channel phase all the way up to essentially right here. And something that's important to notice when we start getting over here is that if you bought, you're still in a buy the close bull trend over here. So if you bought the close of 25, how much money have you made on the close of 42? You've made like 1 point, if that, over the course of 20 bars. Is that what a trend should be doing? No, trends do this, where you can buy, if you bought even this high tick, where were you 10, 15 bars later? You were all the way up here. Versus over here, if you bought, you're 15, 20 bars later, and you're still pretty much in the same area. And that's a big red flag for the bulls, that you're probably, this trend is probably not as strong as you think it is. But still, you can be expecting bulls to buy below 25, second leg up. It's a bull micro channel from here to here, probably buyers below the small inside bar. Bears are looking for a bigger bar to flip the always in, which they obviously got. But yeah, we end up getting essentially channel. I'm rambling. Sorry. We got a channel, a double top, and down to essentially 39 pullback. Sorry, down to 40 pullback 41, and it's essentially a midday reversal at 42. You could look at this as a midday reversal, but big follow through on 43 because traders are exiting below and a little bit lower, disappointed in the past. Expecting this because of the past couple days of price action. Follow through on 44 and 45. But, we might just be testing where this two-legged correction happened, since it's going to be a support area once we pull back to it. 46, bull bar closing near its high. It's a good bar, but, after this, we're probably going to at least get another leg down. Bad follow through on 47 and another reversal up on 48. It's two reversal attempts. So potentially a two-legged correction. And then you get 49, probably buyers below 48 since it's, two attempts at a reversal. So bulls have some conviction. So traders are going to buy below. second leg up. You can see that if you bought above 48, you're disappointed at 49. Those traders exited around break even during 50. Follow through for the bulls on 51, but this just looks like either one, pullback two, pullback three, or one pullback two, however you want to look at it. It's a couple legs up towards the moving average. It's probably just a breakout pullback from this. We ended up essentially getting a wedge, and then we got bar 56. If you're an always in bear, right? So always in bulls, maybe they buy above 6, 7, 8, 9, whatever, and they exit somewhere during 43. Always in bears might sell below 43, but you probably have to exit above 46 and definitely above 48, I would think, second reversal. And those always in traders can sell again below 56. And so that's why I thought 56 was an okay swing. But you get follow through on 57 and then disappointing follow through on 58. And you probably have to exit above 58 since there's risk this could bounce. But then you get 59. It's a 3-bar tight trading range at the bottom of what's probably an overall trading range. And if the bears were going to go, they probably would have just already gotten the breakout. But either way, some always in bears will sell again below 59. They get bad follow through on 60. See, it goes outside up. Any bears who are still short are disappointed in 60, the doji close, and they're exiting around break even during 61. 61 is an inside bar, but I wouldn't quite buy above. But, probably sellers above, probably buyers below. And then we get 63. The problem with 63 is you've been in a tight trading range since 57. So you're in like a 6 or a 7 bar tight trading range. I can see why, it's an attempt at a second leg up and it's probably an okay buy. But the reality is if you're going to buy above 63, you need 64 to be good follow through. And 64 is not good follow through. So that's why another reason why not a lot of these traders exit on 65. Now, do I think 65 is going to break out? No, probably not. You're selling the bottom of a trading range now at this point. And you have to keep in mind the bulls who bought below 64 are probably going to be able to scale in and make money. And we ended up getting essentially 2 legs up back to that low. You can see that's exactly where there were sellers. And then we had a very, very tight trading range into the close of the day. I think tomorrow, so this was a spike and this is the channel. It's probably going to be pretty sideways tomorrow. I wouldn't be surprised since this is so strong if we get a pullback. We got the pullback and we get a second leg up and then maybe some attempt at a major trend reversal. I was looking at Wells Fargo today, 5-minute chart. And I just wanted to give a better example of like what a potential midday reversal would look like. You can see, or kind of what I'm talking about for tomorrow. You can see, you could draw it like this if you wanted to. We had a bull trend, or you could draw it like this. Essentially had a bull move, a trend line break, a retest, and then a sell-off. And so tomorrow, if that makes sense, those major trend reversals that I generally will try to talk about. And so tomorrow, I wouldn't be surprised if we essentially get, we have this whole trend line, and then we get the break, and then maybe a retest and a lower high, and then a sell-off. But we'll see. On the daily chart, we had a good bull bar, a couple good bull bars past few days, but this channel is pretty tight, so I'm expecting another leg down. So I think that, as strong as this is, it's probably just a trading range. I still think we might have to pull back to this high and let those bears out. But if we do, we might form a higher low and try to reverse up maybe back to this low. That's a longer term profit target. It's 913 low, but I think we might get there. Same way we might have to get to this. Pretty much bad signal bars make good profit targets because traders get trapped on them. Just go to the weekly chart real quick. Good follow through for the bulls so far. It's 2 legs down. They're trying to create a second leg trap. Bears, they're seeing this as essentially a breakout pullback from the breakout below here, but they're probably concerned that the bulls made money. However, we're still very clearly on the sell below this week of 9/11. So probably even if we pull back a little bit more, bears might try and sell again and get another leg down. Bulls are hoping this is just a 2-legged correction from this and bear trap. Yeah, that's it.